welcome back to my morning report chart analysis videos on Friday 7th of October with me, Richard Pro, market analyst at Antec Markets. We're going to look at the FX Trade of the Year instruments now. For week one, the final look at dollar yen, Aussie dollar, Aussie Kiwi, sterling yen, dollar sec, Dow Jones, silver and coffee. So let's start off with the dollar yen, breaking higher. It seems to be consolidating a bit and possibly even building the start of a correction phase, but 103.35, which is this sort of green line here, let me just move these, 103.35 is the key level of support near term, and if you break that, maybe that will signal a bit of a corrective phase, but for now we're holding on to that. A lot of volatility around today though we can expect on non-farm payrolls. The Aussie dollar continues to fall away, breaking lower. Certainly not a great move below 75.80. That was a key old support. Quickly show you on the daily chart. Bit of a pivot line really in the last sort of couple of months, but 75.80 breaking down below that sort of turns it to a more corrective chart. You can see here between 75.80 76 figure there is now overnight resistance being held. So little rallies are being sold into, configuration on the momentum indicators and negative. Aussie Kiwi. You're sort of holding on really. You had that little corrective move yesterday, and I spoke about the fact this little breakout above sort of 105.65 area sort of becomes the basis of support, and that pretty much held yesterday and pulled higher from that. So the outlook remains positive. RSI holding above sort of 40 area. So little dips are buying opportunities on Aussie Kiwi, it would seem, for a retest of the highs 106.35. Sterling yen, this is going to be hideous. Oh, sorry. Let's try that again. Sterling yen, obviously the flash crash overnight, big move down to a low of 24.12. Just ignore that. You've seen this sort of rally now beginning already to roll over. It seems as though the resistance is coming in around sort of that 129.60 area, and just rolling back over again. Last few hours it has been sort of finding a bit of support around 129 big figure. So that's obviously an area of support near term. If you break that to the downside, you're looking 28.90, but more likely back towards 28 big figure, to be honest. So it's obviously as an interesting story, moving story. No one knows exactly why it's happened yet, but there is a resistance at 29.60. So if you break above that, maybe you'll sort of pull back towards the breakdown levels. 130 big figure is a key level, but yeah, it's still looking pretty negative, as it has done throughout the day since that big flash crash that changed the outlook. Dollar sec. Is looking increasingly positive actually within the range. Sort of breaking out from the range, that range that have been holding. Sort of broken out through that. The dollar strength is now breaking higher. You'd say momentum indicators confirm the move. It's all looking positive. Buying into near-term dips. That old breakout level around 8.6320 area seems to be a basis of support. So anything above really 8.62, 8.63 area, I think is a chance to buy. It looks decent. Dow Jones still ranging, but in a tighter range, interestingly enough. So you've got these, arguably, I mean I have not done this yet, but let's draw them in anyway. You've got these sort of converging trend lines. So it's sort of coming together, increasingly tight on the sort of trading range. As you can see, you'd be sort of selling at 60, buying at 40 on the RSI, I'd say. And you're playing the range. Look at that, MACD lines increasingly neutral. Looking out for payrolls, really, you're likely to get a strong break on payrolls though, so bear that in mind. But resistance at 18.300, support at 18.100. But yeah, it's increasingly range bound. Silver under pressure. Silver. Let me just show you on the daily chart actually. It's broken that long-term trend line. as has gold, and that breakdown of the long-term trend line sort of really is putting pressure now on 1707, which had been holding through sort of late June. And that is your now key support. If you break that to the downside, you're going to look back at 12 big figure again. Sorry, what am I saying about that's gold? 1575 being that May low, but certainly a big support at 1707 is holding for now, but lower highs, lower lows across the board on the indicators, on the hourly chart, on the daily chart. It's looking pretty negative. Any sort of unwind you get is being sold into. 40 to 50 on the RSI on the hourly is an area. You'd say that the resistance comes in near term, so it's 1750, but even 1740 is holding as resistance today, but 1750 was that sort of old breakdown level. Any sort of rally that you get looks to be a selling opportunity. The only thing that would turn this around, I think, near term would be a ridiculously bad payrolls report, which would induce dollar correction, sharp dollar correction. And finally, coffee. It certainly looks as though it's sort of forming a bit of a head and shoulders top pattern, doesn't it? Let me just stick the crosshairs on it. Is that a head and shoulders top? You could argue. Momentum indicators all look corrective. Breaking below 147 was a negative move yesterday. It closed below that as well, and also closed below this 46.35 level of an old breakout. So it looks increasingly corrective. You could well get a move now back towards 140. You're going low highs, low lows. You've got the resistance that saw with the rally fell over at 151.15. You've got yesterday's high 148.85. Any rebound is a chance to sell now on coffee. So I wish you good luck in your trading on your FX Trade of the Year pairs today, and I will speak to you later. Thank you.